India's IPO market is experiencing a significant surge, potentially setting a record in 2024. The country saw a substantial increase in IPOs last year, that is 2023, with 234 companies going public, up 56% from 2022, and marking the highest annual count since 2017, according to White and Case. The total IPO proceeds in India reached $7.89 billion in 2023. The influx of IPOs combined with stock market growth pushed the total market capitalization of listed companies in India to $5 trillion, surpassing even Hong Kong's market capitalization. Mumbai has now emerged as Asia's leading IPO hub. Despite concerns that this IPO boom might be a bubble, there are still valuable investment opportunities that investors are finding. India now accounts for roughly a quarter of Asia's IPO proceeds, while Hong Kong faces a downtrend, with investment banks cutting jobs in Hong Kong. Though political uncertainties in India might temporarily dampen IPO valuations, optimism about economic growth and concerns over China's slowdown are shifting investors' focus towards India. The IPO momentum has no signs of slowing down at all. FactSet reports that there are 130 new listings in India by mid 2024, with another 55 anticipated later in this year. Notably, international companies are also entering the Indian IPO market. For instance, Hyundai Motors, Indian subsidiary, plans to launch what could be India's largest IPO, aiming to raise 2.5 to $3 billion at a valuation of up to $30 billion. While market volatility following Prime Minister Narendra Modi's narrow 2024 election victory might have briefly cooled investor sentiment, but excitement around IPOs in Mumbai remains very strong. 8 of Asia's top 20 IPO debuts this year have been in India, with newly listed stocks surging by an average of 61% on their first trading day. Retail investors, driven by the fear of missing out, that is called as fear of missing out FOMO, are aggressively using margin loans to secure allocations, leading to significant oversubscriptions, as seen with HOAC Foods, where the retail portion was oversubscribed over 2000 times. This enthusiasm is not limited to retail investors. Institutional investors have also shown strong demand, with some deals seeing oversubscription exceeding 100 times. This intense demand has led to aggressive pricing by issuers and underwriters, leaving less value for long term investors. In response, India's stock market regulator has implemented measures to curb margin lending and prevent price manipulation, which is seen as crucial for the market's sustainable growth. However, there are still concerns of irrational exuberance, as illustrated by the example of resourceful automobiles, a small company with limited operations which aimed at 12 crores was able to get a response of 5,000 crores for its IPO. This raises questions about whether investors are thoroughly evaluating companies and companies' financials before investing, with many driven by grey market premiums and tips from social media. Of course, while bubble in the markets tends to happen cyclically, but One needs to be cautious also while availing the opportunities which discern on investors. A sound investment approach needs to be adopted, and it involves analyzing issuers' long term growth potential, management quality, and valuation relative to peers, as well as closely examining the IPO structure. With India's robust economy and the prospect of lower interest rates from the Reserve Bank of India, maybe in the early period of 2025, the current IPO boom might continue for a while. Mind you, despite concerns about elevated valuations, India remains an attractive market with small caps appearing more speculative due to retail influence. But larger companies with market valuation of above $1 billion, of course, warranting a serious consideration. The IPO pipeline in India features a mix of business well positioned to benefit from the country's macroeconomic trends, offering promising opportunities for investors. However, due care in terms of proper due diligence and without indulging in any kind of hearsay or irrational exuberance, one needs to be cautious about analyzing the long term prospects and taking an informed decision while investing in IPOs. Hope the information is useful to you all. Thank you very much for your patient hearing.